Hello fellow option traders, this is Jeff, and this is a special recording on the GLD trade that I opened on February 8th of 2013. The trade was a double calendar. The reason for opening the double calendar has to do with the price action of GLD for a period of time previous to this. And here you can see the way the chart looked on the 18th. Let me shrink that down a little bit for you so that it all fits in here. The chart that we are all familiar with. We can see here that on the 8th, and for a period of time previous to that, all the way back to December of last year, price was just moving around in this range. And the reason for the double calendar was to take advantage of that price movement and hope that it ends up at one of these peaks near expiration of the short option. Now in this case, I selected the 160 and 163 price for the strikes. Jump back to the chart here, and we can see that 163 is right about here, so you can see that there's quite a bit of price action. I'll just draw a price level in there at 163, and we can see that there is a pretty good chance that one of the days there's a good probability that the price would be pretty close to the 163 level. And if we look at the 160 level, which is right about here, we can see that there is a pretty good chance that it may end up around there as well. So the double calendar was there just to try to take advantage of that. And if we look at the risk profile, we can also see that as long as volatility stayed where it was at these levels here, around the 9%, 10% level of this double calendar, and here it is right here, the ones that I have the checks on, this double calendar, that anywhere around here it was going to be a profitable trade. We weren't going to get rich off of it or anything. It was mostly for illustrative purposes. But as it turns out, it ended up being a very successful trade. And here is, I'm going to show you a way that you could handle this. Now, what I did doesn't work all the time, but when you see price moving like it did on GLD and on gold in general, the gold futures and everything dropped almost $100 in a couple of days. Gold futures did anyway. So that relates to about a $10 drop here, and we'll show you how that was played. And these are real live actual numbers. I don't have screen prints or anything like that from back then, but you're just going to have to trust me that I really did do this. Alright, so on the 8th at approximately 15:35, which is where I've clicked on the OnDemand tool here, and we can see it's rust colored over here, so we know that we are in the OnDemand mode, which is the time machine, Thinkorswim's time machine. We've gone back to the 8th at 15:35. I have it paused, so the pause icon here is white, which means that it is currently paused. And these are the actual prices down here, 29 cents and 31 cents for the 160 and the 163 calendar. I picked regular February expiration and then this Feb 4 expiration, which is really a March 1 expiration. Thinkorswim, I think they get a little bit confused on what they want to call this, because Friday, this coming Friday anyway, based on when I'm making this recording, which I'm making this recording right now on the 25th of February. So this coming Friday is going to be March 1st, so that's really would be a March 1 expiration, not a Feb 4. And last week was the regular February expiration. Okay, so 31 and 29 cents I paid for this. All right, that wasn't a lot of money. There was a good possibility that I would make $10 off the trade. So if I paid, it's not, that would be almost like a worst case, I figured. I could make as much as $40 off of it, which would have been almost like a 60 or 70% profit if it ends up at the short strikes at expiration, the regular February expiration. Which would have been a pretty sweet deal, but I just wanted to do this as an example of what to do when things just aren't moving. I mean, you can do an iron condor too, but calendars work out pretty neatly as well. I also want to tell you that I chose puts on this mainly because if the price moves down, the puts volatility increases faster than a call's volatility. So even at this higher price here of 163, I still selected a put, not knowing that gold was going to drop $100. I did not know that. All I wanted it to do was just wiggle around in here for a couple of weeks and give us some profit. That's all I was looking for. All right, the next time frame that we are going to look at is February 14th. So I click on the jump to, click on February 14th, and it's about the same time. It was 1546 actually when I did the next trade. I'm going to click on go here, and we'll wait for it's pre-buffering now. It's waiting for the data to come into the buffer from the cloud, as they call it. And we will end up with that data in a moment. But what I like to do is I like to look at the charts because the data comes in for the charts quicker than it does, for all the options. All right, so on the 14th here, gold, first of all, it gapped down on the 11th. And I was watching and I go, well, that's strange. And it sort of recovered on the 12th, and then it had a rather large down day, very unexpected, on the 13th. And then on the 14th, by the end of the day, I was pretty well convinced that there was a good possibility that gold was going to make a very strong move down. I don't know why it did that. I can only guess, but it did make that very strong move down. So now you can see that the volatility has jumped up almost a whole % here on the long options for Feb 4, but there's something wrong with these numbers here. Volatility was not zero on this short 163 put, I can tell you that. But what this is telling you is at this point this trade was losing money. So what I did was I bought back my shorts. So the 160 and the 162, I bought those back, and these are the actual prices that I paid. Paid $460 to buy back the 162, and I paid $164 to buy back the 160. I figured I'll wait until the next day and see what gold is doing. So I'll just click on these, and it'll turn that information on, and now you can see that at this moment in time, that the trade is down $119, which wasn't really all that bad. I wasn't really concerned about that at that time. I figured I'm not going to lose that much by waiting till the next day to see what happens. So that's what I did. All right, let's go to the very next day. We will go to the 15th. I wasn't planning on doing this, but we'll go there anyway. And let's jump over to the chart. Okay, we already have this, and oh, look down here. This is where gold dropped down to on the 15th. down. GLD dropped down to 155. Gold futures dropped down below 1600 for the first time in quite a while. I think they were actually around 1650 or so at that time. So now this trade is up $393. So I waited over the weekend, which is kind of a big thing for me because here it was a 3-day weekend because of President's Day. So I was pretty anxious when the market opened on the 19th. And that was at 11:04. So let me change that to, that's when I got out, was 11:04. Come on, 11, and double click on this one, 04, and click on go. Go back and take a look at this chart. Okay, we're still down here pretty good, and I'm thinking, well, I'm feeling pretty lucky that that this trade is working out so well. So I went back and I sold my longs, and you can see that the longs now are worth, and that's what the trade came out to be, was $507 in profit. Pretty happy about that one. So that's one thing that you can do when you have a calendar. It's a way to exit it, I guess, if things go against you severely. And similar to that, today I bought 10 SPY put calendars down at I forget where I bought them at, but if you watch the video tomorrow, you'll be able to see it. Actually, we can just go back to the regular account here. Let me first turn on the privacy so I don't want you to see everything in my account. And we'll turn off the OnDemand, and we'll go back and look at the insurance policy for the spiders that I entered into. Reset. Okay, so the spiders are at 150 right now. I have a calendar that I picked the 136 puts on this. And you can see that if we end up down at 136, it'll be a very nice trade. I bought 10. So that'll end up being a very nice trade. But the other part about it, and I've mentioned this before, is that volatility will probably increase, and we might say like 2% possibly. So we change that to a +2 there. Press the enter key, and everything kind of gets pumped up a little bit when volatility increases. So now this max is at 2810, and if we reset this back to 0 volatility increase, it's 2516. So that's $300 for a 2% increase in volatility, which is what we are going to be watching for if the market decides to move down, and seems to be cooperating today. And I think that if this is good insurance policy, I think, for the sequester. Not sure exactly what the sequester is going to mean, but you can bet that the politicians in Washington are going to make a very big deal out of it. Both sides. So anyway, that's it. The double calendar on GLD and the insurance calendar on SPY. And that's it for this video. Thanks for watching. Have a great day and happy trading.